Hello and welcome to Cryptocurrency Trading, Mastering Scalp Trading Strategies. This first video is going to be about defining scalp trading in cryptocurrency. Now, scalp trading, and this is going to be true for any market, it's not just crypto, is a type of trading that's probably a little bit more different than most traders are used to. It takes an extraordinarily focused mind, as opposed to, you could say, you wanted to bet against the value of Bitcoin during this time. You would just sell it and let it run. Or in the past, if you would have been buying Bitcoin and holding it, that would be like a buy and hold strategy. In scalp trading, you don't focus necessarily on the daily chart, although you certainly can use it to your benefit to try and dictate which direction you want to trade. But for example, this support level here, and if you don't know what a support level is, don't worry, we will cover it. This area where the buyers had stepped in on the daily chart is something worth paying attention to. However, if you go down to a 5-minute chart, you're nowhere near it, as you can see. And in fact, maybe a 30-minute chart, you can see that it had bounced from. But a scalper lives in this world. So they look for little areas that could offer clues as to whether or not we are going higher or lower. Now, there are some major benefits to scalp trading. So, for example, you get in, you get out. So your time in the market is much less. So your market risk, at least as far as time is concerned, is much smaller. You do have some disadvantages of scalp trading, or with scalp trading as well. And that would include the fact that little micro movements can be very noisy. They don't necessarily follow longer term trends. So going back to the daily chart, you can see if you were short or betting against Bitcoin, you did quite well for quite some time. On a 5-minute chart, it's going to look a lot different. Yes, it had sold off there, but now we're starting to turn back around. And if you are short of the market, betting against the price, you could find yourself in trouble on a 5-minute chart if you have a huge position. This leads me to leverage and margin trading. Leverage is the ability to trade more than you typically have in your account. So, for example, and I'm just going to use simple numbers here. Let's say you have $1,000 in your account. If you have 10-to-1 leverage, then you have the ability to buy or sell $10,000 worth of cryptocurrency. That is your 10-to-1 leverage. So you do have margin. You have to put up a certain amount of margin to control a position. So in that case, your margin would be the $1,000. Now, obviously, you wouldn't fully leverage it out because you would find yourself violating the minimum margin requirement as soon as the trade went against you. Generally, in a situation like that, even the most risky of traders might be trading a $5,000 position, which is quite a bit. So do understand that leverage and margin comes into play. Leverage can help you. It also amplifies your losses. So in your $1,000 account, let's say you're just trading $5,000 worth of Bitcoin, and you decided to sell the market down here, and in this sense gone against you. Well, those losses are the same as a $5,000 position. Just as you bought it here, you would have the same gains that you would have from a $5,000 position, even though you only had $1,000 in your account. So those are things to think about, and you do have to pay close attention to it. That being said, margin is a double-edged sword, and that's the one thing that you need to know. You need to understand risk management and things like that. And, of course, we will show you how to look through these charts, perhaps give you an idea of how to deal with risk management late in the course. In the meantime, we're going to talk about, trading these markets, trying to make sense of short-term moves so that you can find yourselves in and out of the market. Another advantage to scalping is you can do it most of the day. So depending on what your time frame is as far as work, you may find that scalping works really well for you because you don't have the opportunity to trade around the clock. So you get in, you get out, maybe the course of an hour or two, and you're done for the day. In the next video, we'll talk about, learning to understand the factors that affect cryptocurrency prices. Hello, and welcome back to Mastering Scalp Trading Strategies by Wealthy Education. So in cryptocurrency, just as any other market, the market is moved by fundamentals. Now, yes, there are technical setups, and we will certainly go through a lot of them in this course that can give you an idea of which direction the market is moving. However, there are other external forces that make participants buy or sell a currency. That's true in the Forex market, in the cryptocurrency market, in the stock market, bonds, etc. So one of the most obvious ones will be economic factors. So in a time of economic strength, you see more money go out on the risk spectrum. So in this case, the risk spectrum would be cryptocurrency. Cryptocurrency is brand new. It is not like buying a bond or shares in AT&T or whatever, you don't, or gold, you don't necessarily know how it's going to perform over the longer term. And you have to think along the lines of large funds. They don't throw a lot of money at cryptocurrency if they are concerned about the global health of economic situations. You can see we had this big run up in 2021, but notice how we had this big run up here and then we broke down in 2018. So suffice to say, you need decent economic growth to power innovation. It's going to be very true with technology stocks. Very similar situation. So in this case, you could, just going to use the cues here. This is a ETF that follows the NASDAQ, and you can see not a perfect one-to-one correlation or anything, but you can see they do tend to move in the same general direction. It pulls Bitcoin up, etc. So this is a correlation that a lot of people pay close attention to. And again, there are times when we break away from it, but it does suggest that you need technology stocks to do well for Bitcoin to do well. It makes sense if you think about it. News and events can affect the market. This is especially true like with capital controls. We've seen that happen with the Chinese refusing to allow money to leave the country. A lot of times you'll see Bitcoin get a boost. You also have seen other situations like Venezuela. Bitcoin was very popular in Venezuela for quite some time because of the crushing inflation. It's about saving wealth. You also have government policies and regulations. So in the United States, for example, there are a lot of people talking about what to do about cryptocurrency. That obviously will have a massive influence on what happens, maybe not so much with the individual investor, but institutions, and they move markets. But keep in mind that all of these things come into the picture, and you do have to be mindful of whether or not they are good or bad for crypto. Most of the time, this is something that you read stories about. You maybe watch some news sites. You kind of digest the news and you think your way through it. It's not something you react to right away 99% of the time. It's a general attitude. For example, if people are feeling very comfortable about the overall economic situation, then they're okay with buying Bitcoin. If they're fearful, institutions especially will do things like buy U.S. bonds. Well, that doesn't do much for Bitcoin. It takes money that could be allocated here and puts it over there. So it's just a little bit of common sense, but you have to understand Bitcoin does not operate in a vacuum. External factors do come into the picture. In the next video, we'll take a look at volume analysis in scalp trading. Hello and welcome back to Cryptocurrency Trading, Mastering Scalp Trading Strategies by Wealthy Education. In this video, we'll take a look at volume analysis in scalp trading. So to get volume on your chart here at TradingView, you can go up here to the indicators, metrics, and strategies. You click on this. And now I happen to have this saved as a favorite, but you can type in volume. And there are a million different volume, like volume oscillator, seasonal volume profile, up, down volume, etc., etc. I just use, in this, I'll use typical volume. And you can see I have it on the chart. You just select that and it pops up and you can see the colored bars. This basically tells you where money comes into the market. So you can see that, yes, there's volume at every tick. Every little move here on the 5-minute chart. But notice how there's this explosion in volume. And what does that tell you? Well, that tells you there's interest in the market, that people are jumping into the market, and therefore price action that you see as a result tends to be a little bit more believable. Simply put, there are people who truly want to get involved. Now, here is an area where you see a massive sell-off. Well, notice that it starts to die off and then it picks up again and the buyers come back. With that being said, markets that are doing very little will have very little in the way of volume most of the time. You also want to pay close attention to whether or not there is a lot of volume at a crucial turning point. So you can see that the market has basically been going nowhere above 1825. And now we suddenly have volume where we just launch from there. Well, that tells you something's going on. People want to be involved, and in this case, Ethereum. Let's go ahead and just take a look at something else. Let's do Chainlink. Same thing here. You can see that we bottomed out. Now, this is something called a hammer. This is a candlestick that is very bullish. You can see that it is also an area where buyers had been at previously. There was a lot of volume there previously. So this volume picking up here tells you that there are people interested in buying Chainlink around $6.80. It doesn't guarantee that you are going to make money every trade, but it's obvious that as we start to turn around and the volume is picked up, somebody big is in the market. Just as if you have a situation where we're taking off here, starting to rally, notice the volume really doesn't pick up that much. It does pick up a little bit here, but then it drops right back off. You know, think of it this way. You have to have other participants in the market interested to move your position in your favor. It doesn't matter that you bought Chainlink. What matters is that other people are buying Chainlink right along with you. So with that being the case, you have to be very cognizant of the fact that you're just not big enough to move the market by yourself. However, if everybody jumps in, it's a completely different question. And you can see that, so like your pancake, we had rallied a bit and then started to peter off. And notice how the volume just collapses. Well, that tells you that, yes, there was a lot of interest in buying it, but there was no follow through. And you can see that we had a couple valleys here, and then we really started to drift lower. This is a wild candlestick that somebody probably got a miserable fill. Lot of volume. You can only read so much into that. That's a candlestick that you really can't trust because it's, just put it this way, it's very unbelievable. You can see that we broke through an area that previously had been important support, and we'll talk about that later, don't worry about it, but just know that there were buyers there. And once we broke through, the volume picked up and the sellers overwhelmed. So you can see volume does have a lot to say about where we might go next. Or at least the best way to think of it is it confirms that there is real big money underneath it trying to push price along. In the next video, we'll take a look at order book analysis. Hello and welcome back to Mastering Scalp Trading Strategies by Wealthy Education. In this video, we'll take a look at something called an order book analysis. And an order book, or a DOM, D-O-M, depth of market, is something that a lot of futures traders use, but crypto traders also are known to use it. You can click here on Trading View and it'll open it up. Now, one word of caution, your trading panel, you have to come down and connect your account. And if you have an account that connects to Trading View, then you can go ahead and use the Trading View order book. As you can see, though, if you connect like paper trading by Trading View, it still won't give you the numbers other than the price. So let's go ahead and let's go ahead and get rid of paper trading. And I actually have an account. In my case, it's at Binance US. So let's go ahead and pull that up, and that way I'll be able to show you the full functionality of what an order book looks like. So you can see we have a chart here, but over here we have several different things going on. This is the transaction. I happen to be an Ethereum. This is going to work the same with crypto, with futures, stocks, Forex, not so much because it's not a centralized market. Now, you see that this continues to move back and forth. And what we have here is a very similar representation to where we had the number in the middle and then right and left. And that shows buyers and sellers. So, for example, there are, and this does move quite quickly. So there's like 6,500 Ethereum here that somebody has placed, or 6,500 total Ethereum that somebody has placed a order at. Here we have 21 or a 2.1, excuse me, at 1861. This tells you that there is an order there that wants to fill. Now, why does this matter? A lot of it's going to come down to your time frame. So as we are talking about scalping, if you're looking to get in, and let me go ahead and go to like a 1 minute chart here in Ethereum, and you're trying to see where the order flow is, well, you'll see how many coins are there, behind this order, and it shows you where all the pressure is coming from. So more orders up here on the red, meaning sell. So there is a little bit of negativity, but if you see these taken out, and people are stepping up and buying, that is very bullish, because remember, there has to be a buyer and seller. So if this is the price, 1861.58, if you want to buy it, you have to pay 1861.77, et cetera, et cetera. If you want to sell it, this is what people are willing to buy. Remember, this is an auction process. It's very difficult to trade the DOM or the order book unless you have really fast connections. Most people stick to trading patterns because another problem you run into with order books is something called spoofing. And as crypto is not very heavily regulated, it runs rife. You'll have somebody come out there and throw 3 million tokens for sale at a specific price, trying to get people to run from it. And the entire time, it's not a real order. They pull it off of the books. As long as you have it in your account, if I had 1,000 Ethereum, I could place it wherever I wanted. And it can trick people into jumping in and out of the market. So it's only somewhat useful. Volume analysis and order book analysis together makes sense. You can see that we had been rallying there. More likely than not, you had seen large red orders being taken out, the buyers getting more and more aggressive. For little micro movements like this, though, it does get to be a little bit much, and it is a skill that takes years to work on. There are people out there that will trade just with this. They don't even bother with the charts. It is a skill in and of itself, but it is something you need to be aware of. It does show you where there might be large orders hiding. So there's a lot of selling pressure right here. Does it get taken out? If it does, there's a good chance that we go higher. If it does not get taken out and the buyers get taken out, it's a good chance that perhaps we go lower. There's a lot more nuance to this video. Liquidity is a big deal as well, which is just depth of market. Really at this point, kind of hard to get a grasp, especially in an unregulated market. Although, quite frankly, stocks do the same thing. There's plenty of spoofing on stock exchanges, high frequency orders, bids between the two available prices for retail traders. Really, the only way to use this effectively is to sit here and watch it for hours upon hours to kind of get a feel. You'll see sometimes patterns return. Lots of sellers show up in one spot and then they get taken out, and you realize that that might be good for a couple of ticks. Very, very difficult to do. But it is something that you will see some ultra short-term scalpers do. More likely than not, what you need to do, the average retail traders, you find an area like that and you say, okay, that might be resistant. So are we seeing buyers step in? If we do, and you see a lot of green and then a couple big red ones take out, that tells you that the buyers are stepping in and they are in fact trying to go higher. What happens if we break through it? Well, if you see a bunch of green that gets just wiped out, an aggressive selling, hitting the bid, as it were, is what it's called. If you're a seller, you say, hey, I'll sell to this guy down here. I'll sell to this bid. This is the closest bid. Then you start to see downward pressure, and then it kind of confirms the breakdown. Again, it's lightning fast. This is actually a very quiet market right now. So you just need to be aware of the fact that it is there. Sometimes it can be helpful as far as entries and exits as well. If you're getting close, say you're short, you're getting close to a support level and you see a bunch of buy orders come in, maybe it's time to take profits. It can be used in that sense as well. So just a quick overview of what it is. It's something that only the highest frequency of traders get involved with. Most of the time, this is all automated. If you have an automated strategy, it may take some into this into account. But it's an art form in and of itself to be able to read this quick enough to pick off a few ticks and then get out. So in the next video, we'll actually start talking about technical analysis, and we will talk about support resistance in the first video, which is exactly what I was talking about here. I'll explain it to you. Crucial for any foundation of trading.